Bantuan khas keuangan kepada semua penjawat awam grade 56 ke bawah termasuk latihan kontrak sebanyak RM500.
Have you ever wondered where all this money is coming from? Yes, it's come from the government, but have you ever thought about where the government is taking this money from? What is tax? Tax is money that people and businesses must pay to the government. It is collected so the government can provide important things like roads, schools, hospitals, police, and other public services. In simple words, tax is the money we give to help the country run. Now, let's see the list of taxes we have in Malaysia. We have two taxes categories, which are taxes on your income, tax and gains, and taxes on your transactions and purchases. Taxes on your income, tax, and gains. What are these? Income tax is money you pay to the government based on the income you earn. If you work, do business, earn rental income, or receive dividends, that money may be taxed. The more you earn, the higher the tax rate. You pay income tax every year to LHDN. Gains means profit you make when you sell something for more than you bought it. There are two main types in Malaysia: capital gains tax, CGT, and real property gains tax, RPGT. Capital gains tax is for companies when they make profit from unlisted shares or some foreign assets, while real property gain tax is for both individuals or companies who sell house, land, or real estate in Malaysia and make a profit. Taxes on your transactions and purchases are indirect taxes, meaning you pay them as part of the cost of a transaction. They are primarily managed by the Royal Malaysian Customs Department. There are four taxes in this category, which are stamp duty, is a tax on legal documents and agreements, EEG, property transfers, loan agreements, that we paid to Inland Revenue Board of Malaysia, IRBM or LHDN. Second is sales and service tax, or SST. This is the consumption tax you pay when you buy goods or use services that paid we to Royal Malaysian Customs. The third is excise duty, is a sin tax on specific goods deemed non-essential or harmful, like liquor, tobacco, and motor vehicles that we paid to Royal Malaysian Customs. Lastly, import duty is indirect tax levied on goods brought into Malaysia that paid we to Royal Malaysian Customs Department. Who should pay tax in Malaysia? Not everyone have the same taxes they need to pay. Some may need to pay income tax and some may not. Let's dive deeper to see who should pay the most tax in Malaysia. LHDN guidance says individuals who receive employment income above the registration filing threshold, around 34,000 to 37,000 ringgit annual salary after EPF deductions, must register for tax and file returns. Businesses that manufacture, you import taxable goods, or supply taxable services above the prescribed turnover thresholds must register for sales and service tax SST and collect remit SST to the Royal Malaysian Customs. Non-residents who earn Malaysian-sourced income are taxable on that Malaysian income, typically at a flat non-resident rate, commonly 30% for many categories of income. All self-employed persons, sole proprietors, freelancers, e-hailing drivers, online sellers, tutors, must declare business income and pay tax when their taxable income is above the threshold. So, why pay taxes? Taxes are the lifeblood of any nation. Every ringgit you contribute goes directly into the federal government's consolidated fund, enabling the operations and future development of our entire country. The first major benefit is seeing your money build the nation. This includes crucial infrastructure like roads, public transport, and high-speed rail. It funds the construction and maintenance of public hospitals and schools, ensuring quality services are accessible to all Malaysians. Secondly, taxes fund our social safety nets. This includes welfare programs and financial assistance for low-income families. Furthermore, taxes are reinvested into economic stimulus, innovation, and maintaining subsidies that help keep the cost of living stable. Essentially, paying taxes is our civic duty to create a better, safer Malaysia for everyone. When you pay your taxes, you are directly investing in your own future and the stability of the entire society. What happens if you ignore your tax obligation? Non-compliance is taken very seriously by the Lembaga Hasil Dalam Negeri, or LHDN. Tax evasion is a legal offense under the Income Tax Act 1967. Initially, you face hefty financial penalties. Failure to submit a return or a late payment can incur penalties ranging from 10% to 300% of the tax due, plus compound interest on the outstanding amount. This dramatically increases your debt burden. For severe or repeated non-compliance, LHDN can impose a travel ban, preventing you from leaving the country until the debt is settled. In the most serious cases, LHDN can initiate court prosecution, which can result in significant fines and even imprisonment. The solution is simple. Be proactive. Keep accurate records, use the e-filing system, and if you have issues, contact LHDN immediately. Full compliance protects your finances and ensures you can contribute positively to Malaysia's growth.